Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and 10-year note yields still stuck in that range. We're between that 280 and 290 range. We've only seen a settlement a handful of times over the last month outside of that range, and it's been to the upside and it's been very brief. And I think right now the Treasury market's still waiting for something, waiting for a catalyst event. Maybe it's FOMC, perhaps it's inflation data, or perhaps it's the admittance that growth isn't as great as we thought it was. But there's a lot of reasons why the market is waiting for something. Wednesday at FOMC will be the first chance the market gets to finally get something. Maybe it's off forward guidance, maybe it's off new Chairman Powell's press conference. There's a lot of reasons why the bond market's waiting. It's will it get what it wants and move either north of 290 and make a push towards 3%, which I think most are expecting, or do we get that push back below 280, back towards 275, which I think many are not expecting, which is why when yields go down like they are today, we see volatility bidding higher. Now, volatility bids ahead of key events because of the uncertainty, but this one especially, given that we're going to get forward guidance, we're going to get projections, and we're going to dots, and we're going to get the press conference led by Chairman Powell. So right now we are seeing a lot of uncertainty. Volatility is bid in the Treasury complex, as it should be, ahead of a key meeting. And lastly, let's look at the Treasury curve. With all this talk of higher yields in the back end of the curve, you would expect us to be talking about a steeper yield curve. And while we did see a moment in of steeper curve, it's really reverted back to its flattening bias, especially when you look at 2s, 10s, or 5s, 30s. It's really gone flat. And that's, again, that is attributed to the uncertainty, the question on growth going forward, and how will a Fed with low growth and high inflation deal with rate hikes. So right now, I certainly think that the Treasury curve is giving as many answers as it is questions because of the fact that it's so low, and we're talking decade lows. That in itself is something that the chairman is going to have to address at this week's FOMC. So the Treasury market's still trading in a range, not yet showing a real bias, where I think the hope trade is that it goes higher, but the reality trade we'll get on Wednesday, and if that's anything like low growth, we're going to see lower yields. This is Todd Colvin coming to you from the floor of the CME Group.